Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, November 30th, 2016. And in this video, I'd like to take a quick look at IWM, look at it on various time frames, and just go through a few of the top components. I can say this: IWM is a fairly balanced index. It has nearly 2,000 components within it. As the name implies, it's not exactly. I believe it's about 100, 1,970 stocks in there, give or take, right now. And we don't have such an overweighting in the top 10 as you do in something like the NASDAQ 100, for example, where the top 10 make up the bulk of the returns of that index. But with that being said, we'll look at a few because the charts are very much in alignment. And there is some, there are, of course, the top weighting in that, the top holdings or top weighted holdings in the IWM do have some significance there. AMD, for example, makes up over 1/3 of 1%, and then you go down the line and you have the other components there, so they make up a decent part of it. And either way, it's just a way to give us a feel for where the index might be going if we get a feel for where some of the top holdings are going. All right, so we're going to start with a 10-year weekly chart, which we're looking at here. This one's a little bit busy. Horizontal lines, as always, if you see horizontal lines on my chart, those are either support levels if below current prices or resistance levels when above. I also have a couple trend lines here, Fibonacci fan lines. These yellow lines are called Fibonacci fans. I'll expand on that in just a second on another chart where it's just we're looking at the Fib fans by themselves. What I'm looking at here, one of the things to note is we've had this magenta colored uptrend line. It's not the best to find. I'd put it on a 3 on a scale 1 to 5, maybe a 3 as far as trend lines go. It generates off the early 2016 lows. I will often do this in trendline drawing, exclude a candlestick shadow such as we did here, that little tail, but we caught the body, we caught the tail of the next candle, we caught a couple here, and then most importantly, to validate that trend line, once it was broken, you can see the impulsive selling. That helps to validate it. Then we had that crazy post-election rally here in the U.S. IWM is chock full of a lot of bank stocks, small regional and local banks, and they've had just, went crazy with the whole talks of a repeal of Dodd-Frank. The biotechs helped to kickstart that rally. They've since faded a lot of those gains. And there's been some tech stocks and other smaller caps. And, as a rule, historically speaking, small caps tend to either hold up or even rally on a rising dollar. It hurts large cap companies, or at least so goes the logic. In other words, when the U.S. dollar is strong, that means other currencies from countries that we export to, such as European nations, China, Japan, whoever. Well, we're not exporting a lot to China, just any other country that we're exporting to. It costs more for them to buy our goods in their currencies. So therefore, it hurts their large cap multinational companies, which tend to do a lot of exporting, selling their products overseas. Small caps, as a rule, tend to sell more domestically. And that's one of the reasons I think we've seen this rally recently in the small caps. At least the rally in the dollar has exacerbated the gains in the small caps compared to those in the large caps. All right, enough on that. That's a little fundamental tidbit for you. Let's take a look at another board here. So we have just to clarify on that trend line, which was validated there, we have basically a breakdown and a backtest, high-level backtest. We have long-standing divergences still in place that have not been taken out. These divergences have been building for years as IWM has eked out a marginal new high. I'm referring to breakout above the mid-2015 highs. By marginal, we're only, right now, just about 3% above where we were back in 2015, if that. I didn't even capture the highs there. I had that line a little bit below there. So you get the point. We're barely above. We've virtually gone nowhere, I should say, since the middle of 2015. Not just the small caps, just about every other index out there. Let's take a look at these Fib fan lines. They have, I've harped on these for years now. I've put these up on the site. It's not something I just retrofitted after the fact because it looks good. All the way back here, I noticed a pretty distinct reactions, if you will, off these Fibonacci fan lines. They generate off the 2009 lows back in March of 2009. And they work, once you drag them and place them whatever level, it will automatically spread the fan lines out based on a Fibonacci sequence. Now, Fibonacci, whether it's retracement levels, fan lines, timing cycles, they never fail to amaze me. It's just a pretty powerful thing and a useful tool in trading and investing and a lot of other things, in science, for that matter. But take a look at how well it's acted as support when tested from above, just like any other trend line. And then you have this impulsive selling. Once that was broken, that validates that that is an important level. Now you could have drawn a trend line there, and you can, and I had it on my chart before that. And at some point I added the fib fans. I could just see how well it acted. So just like any other trend line, if you will, you have acting as support when tested from above. You had a breakdown here, just a 1 week flush out move. That was that flash crash back in 2011, I believe that was. And then we snapped right back up in there, and just like regaining a trend line, it acted as support for many attempts when tested from above. Finally broke, and like any other trend line or support level, when once broken, it becomes resistance. So you can see that level was then resistance, tested from below for an extended period, and this was really the bulk, the middle of the bull market, the strong advance. And again, you can just take a look and see. So the final fib fan line was broken here back in right around the beginning of the year, late 2015, early 2016, and you can see how well it fought to hold that level. And once it gave way, again, further validation, just as was back here. Once those levels are broken, to show that that was a significant technical level, you see that impulsive selling. That only helps to confirm it. Why am I harping so much on these? Well, we're back testing that level now, or we back tested it and we've already reversed. So let's see if that's it. Let's see if that's the final gasp of the bull. Only time will tell. Just something I find interesting. A couple other things to note while we're still in the weekly time frame. These are oversold readings. For those of you not familiar, one of my favorite tools to use to determine whether the stock market or index or an individual stock, security, anything is overbought or oversold is the RSI. And you can see here on a weekly chart, oversold can stay oversold for some period of time, but usually the crosses below that level, and by the way, that level being 30, the overbought level is 70 on an RSI, oversold is anything 30 or below. So you see what happened. You had a strong rally back in the bear market, and don't underestimate you're looking at a 10-year chart. These are big price moves. That was a 40% gain, that little snapback rally or bear market rally, if you will, from that first oversold reading. Then we had a second consecutive oversold, actually with some positive divergence, because you can see this low in the RSI was higher, and why prices made a lower low. So you had a divergent low, which is one thing I always look for on a weekly chart for a major trend change. That's why I was pointing out those long-standing negative divergences a minute ago on the other weekly chart of IWM we were looking at. So that divergent low marked the bottom of the bear market and the beginning of a new bull market. And you can see any other time, especially in a bull market, when you have oversold, once a bull market is established, as it was at this point, we were now in a bull. This was the end of the bear market / beginning of the new bear market. So bull market, I should say. So in the bear market, that oversold reading was deeply oversold. Once the bull market began, we had we hit that 30 level, maybe went a hair below, and then kissed it. Came very close. We didn't quite hit it there, almost. We did hit it there, and my point being that oversold during a primary uptrend or bull trend, it usually proves to be very fleeting, number one, and also provides, usually provides a good buy signal, but as I always say, use that in conjunction with other indicators. Now, oversold, and I'm going to flip to another board here in a second. Oversold in a bull market can become, and often does become, much more oversold. Flip this around. If we enter a new bear market, it wouldn't be uncommon to see oversold become more deeply oversold or stay oversold for an extended period of time, as we were here. But overbought in a bull market tends to stay overbought for extended periods of time, or exceeds the overbought level, that 70 level, by quite a bit. So you can see how well each of these lines that I have here just show you really where the overbought readings occurred from, and the rallies that came afterwards. You can just see, I just grabbed a trend line to kind of give you an idea how strong those advances were. And that was the last one right here, was in the beginning of the year, and we rallied from there about 43%. Now we've come full circle. Let's flip to the other board and take a look at the inverse of oversold readings, which are overbought readings. They work the same way. As I said a minute ago, this has been a bull market since 2009, so therefore we've had some extended readings. But one thing I look for when you have overbought readings are these divergent highs. If you have these extended periods of where prices were overbought, as we did here, what you want to start to look for is a series of lower highs while prices continue to make higher highs. So that's what we had here, and I circled it. That's what that yellow trend line shows, the negative divergence, we call that. So there's negative divergence. That was just a single reading. So here it is in a nutshell. Since this bull market began, and keep in mind this is one of the longest bull markets in history, very long in the tooth, we've had 4 periods, and again I use this as a cluster of readings because they all came within close proximity. Never did the RSI even come back down to the 50 level. It stayed up above 50, which is the midpoint. So this is just one continuous block of overbought readings, which occurred at the strongest point, right in the middle of the bull market, really, which is, probably, I don't know if you can apply an Elliott wave count to this, 5 or 7 wave primary count, but that'd probably be right there in the middle, and that's usually the strongest advance during a primary trend. All right, these are where those overbought readings occurred, and even in a bull market, those often prove to be sell signals, or at the very least, a warning that prices are getting frothy and ahead of themselves. So in this case, these are just, I measured these out, and it was roughly 21% drop. That's from the peak when we had the overbought reading down to the lows. Overbought from the peak to the lows, 30% drop. From the peak here, and again I used, I did use the peak, and we had this divergent high, but from there to there, that was a 14% drop. That divergence actually continued, really, if you look at it this way. We didn't quite reach overbought there, but prices made a higher high, so that was actually one long extended divergent high. And this drop, I'm going to grab it. I'm moving just to the right of where the highs were, and I'm going to move down and tell you that was a 27% or so drop, and again that came following a divergent high. All right, where am I going with this? Well, let's look at today. Where are we? We just recently had a double tap, 2 consecutive divergent highs. We did come back right around to that 50 area, but we snapped right back up, and they were in very close proximity. So this is just a consecutive reading. We have negative divergence because the RSI is either making an equal or a slightly lower high while prices are making a higher high. So there it is, guys. This is just plain old statistics. That's what we look at. Try to put the odds in your favor. So I know it's frustrating to no end that for those of you that have shorted IWM, I'm still short from that trade a few weeks back, and I added today based on what happened on the 60-minute charts, what I put up. And that's me. I'm not putting this on as an official trade yet, but I do think the small caps are headed lower. And again, the point I want to impress is if you look at this and this and this in history, just about any other asset or index, this tells us that we're probably looking at a drop of 14, or let's say 15 to 30% or more in the coming months. The hard part about this is it possible? Do we have a series of consecutive extended overbought readings? In other words, the RSI come back up, prices keep moving up, maybe little pullbacks, but keep making a higher high. Possible, but very unlikely. Again, look at the duration of this bull market here, and just Google bull market history. Historical bull market durations. This one's gone on now 7.7 years. So the odds of it going on for another year, 2 or 3 is very, very, very low. Anything's possible, but very low. All right, a couple more things to look at. Let's move down to the daily time frame. This one's very busy, and apologize for that, but there's an extreme overbought reading on the daily RSI. I mean, we're talking that maxed out at, let's get that out of the way there, and just tell you how high that reading went. If I hit it with the crosshairs, it'll tell me the RSI was at 80. Yeah, right about 80. There it is. You can see it. So a reading of 80 on the daily RSI is super rare. I wish I could go back farther. That's one limitation of TC2000. I can do it on my other charting programs. They just don't work as, they're not as the functionality isn't as smooth when going through these charts quickly. So we can only go back 2 years. But I can tell you, we probably haven't seen many, if any, readings 80 on the RSI. So this is super overbought. Looks a lot like a final blow-off top, quite possibly. And let's just take a look at some of the technicals here. So we have that RSI already rolling over after extreme overbought levels. We have the MACD, or in this case I'm using the PPO. It's probably a little better used on a sharp move like this, like we've had, especially with a large difference in the price scale, you know, with that rally that I said was about 40 something, 44% since the beginning of the year. And either way, you can use a MACD and you'll see the same thing. It's rolling over. That's a momentum indicator showing you the momentum is waning. And then let's take a look at a couple other boards. Here's a clean board. This is the same daily chart. We had negative divergence just as we had back here. This was that big correction back in the markets when the IWM peaked out in the middle of 2015. Big old drop measuring about 28% or so. We had divergence here. We started to fall, and then the election happened, and everything was just, you know, the world was tilted off its axis. Nobody, or at least the majority of market participants, did not anticipate a Donald Trump win. So there was a lot of repositioning, short covering, buying into financials, things that benefited the small caps the most. So that you can say that foiled the charts if you want. Now this did play out, and if you look at it really, if you look at it this way, the drop was. Sorry, I had to pause the video there. A phone call I had to take. Let's try to, what I was getting at here. If you take the measurement of the wedge, which is the widest part of the wedge, that's what I'm doing here, and then you add that on, yeah, I would say this. Add that on to where the wedge broke down. So that one pretty much already played out for that minimum, or I should say not minimum, the measured target. However, we've had a snapback rally, and you can see where we're backtesting. Pretty much that wedge, if you take that wedge, here's the apex of the wedge where it comes together. So we had a brief overshoot. We got inside the wedge, overshot it by just a hair, and we're certainly starting to move back lower recently. As I mentioned, there's a high level, PPO cross and not yet, but we're looking at a pending bearish PPO cross. That's usually a pretty good sell signal when you have bullish and bearish crossovers on the PPO or MACD. Again, they're going to appear similar. RSI, one of the tools I like to use when I always say overbought in itself is not a sell signal. However, once you reach extreme overbought readings, it's usually that cross back down below 70, which then triggers the sell signal. And that seems to be what we have in play right now. So there's another view, essentially a very steep bearish rising wedge confirmed with negative divergence, breakdown, and now a high level back test while we're extremely overbought. So all I'm doing here is just building the case that IWM is most likely headed lower. Now here's the chart I put up today on the front page, IWM 60-minute chart. Pretty self-explanatory. You have negative divergence across the board. MACD, RSI is a trend indicator I use with the 13 and 33 EMA pairs. It's used as a trend indicator, but you can also use the histogram to note divergences. Now the histogram just shows when that pair crosses. So you can see when it's red, when that trend indicator is below zero, it's red, and it indicates it crossed down here. There were a few whipsaw signals because IWM was trading mostly flat, but you can see we had what I call a mountain or a mound when the histogram is clearly bullish, I should say, green. And then we had that crossover. So that was your sell signal, even though there were a few whippy signals after it. It told you from this point on that the trend was bearish, and it did a pretty good job of that. So it kept you short there. It was a bearish trend right here, as you can see, bullish trend there, and you can see them all down below here on the indicator. So we've had that bearish trend. At this point, everything crossed green, or I should say the trend indicator crossed green, kept you long throughout most of that uptrend. Shame on me. I tried to jump the gun on that last short, got in a little early, and we were stopped out. But again, losses were minimal. A lot of you I know held on to the trade, so probably getting close to break even now. I can't remember exactly where the official stop was, but this is it. We look at the 60-minute chart. I see a nice shelf of support right there at 132.20 that has given way today. We haven't really seen a lot of impulsive selling yet. But support is broken, and once we took it out earlier today, there's that 60-minute candle. You can see how well that level has acted as support. For all the way back here, it was resistance from below, broke above. It was then support when tested from above. We had numerous candlestick reactions from it there, and we broke down. So that is a clear break of support, and these trend indicators, I just explained the 1333. You can see it start to cross. It is negative now. You can see the negative 0.02. That means it has crossed over. There's a little splash of red there if I zoom in. And another trend indicator I always use or like to use is the 9 EMA, the signal line on the MACD. And when that's below 0, which it is just now crossing below, that also confirms the trend is bearish and bullish when above 0. So there's some supporting evidence on the 60-minute time frame. My targets, as I showed, are minimum pullback targets. Again, if you look at the weekly and daily charts, and that's the reason I spent so much time on it, depending on your trading style, if you short IWM here or you were already short, you can set your stops, not too far above the highs. You can set a little bit above 132.20, and you may want to let it ride instead of taking the quick pullback, the quick gains on a pullback trade. I think I said that would be about 3. You can see to the left about a 3% drop if we hit that first target, and about a 4.75, nearly a 5% drop if we hit that second target. So, a quick trader just looking for a pullback trade, you can use TZA. There's not going to be that much decay in a broad index tracking ETF, even with that leverage. So then you're looking at a gain of about 9% or nearly 15%. You have that 3-time leverage. So that's that. And that would be, again, for a quick pullback trade. Let's look at some of the top components, and then we'll wrap this up. AMD, Advanced Micro Devices, is the largest holding in the IWM. It's about 0.36%, so about a little over 1/3%. Again, they don't have the huge overweightings like the NASDAQ 100 does. There's a pretty clear, looks like a rising wedge type pattern. Pretty well defined uptrend line, so we need to see AMD break below that level, and that's really pretty much any more downside. We're at 894 now. It's coming up on 3 p.m. right now as I'm doing this video, so hopefully I'll have this out before the close. So that's something to watch for today or possibly tomorrow, and I don't see AMD even blinking till it gets down to about this target level here that I have on it, which comes in around 776 or so, call it 775. I think it would be a fairly straight shot down. Might have a little hiccup here along the way, but I'm looking for a pretty swift move. Trend indicators are still bullish, but if that breakdown does occur and prices move any lower, AMD will flip bearish on the MACD and 1333 trend indicators. What does it look like on a daily chart? Well, not super clear. We had an uptrend line at this point. It was broken, back tested. Prices started rolling over. But in the Trump pump, this one was a beneficiary, rallied back up, regained that trend line. However, that trend line had numerous reactions. I think it's still valid. And so if my 60-minute chart scenario plays out that I just showed you, this will break again, this trend line, and AMD will probably head lower. Most importantly, you can see there's this high is clearly a divergent high, negative divergence in place on the PPO, on the RSI. Divergent highs very often result in a correction or a trend reversal. All right, let's look at a couple more and we'll wrap it up. TSRO, this is a biotech. Tesaro, here's a couple, you can see a couple trend lines. There was one that was broken, prices back test. Price actions have been very sloppy in this one, but here's an uptrend line that I'm watching. Clearly a divergent high in that one on the daily chart. We'll just look at the daily and 60 minutes on these. So there's a minor trend line, but has a lot of reactions. So look for a break of that trend line, probably bring Tesaro down to this trend line here, this uptrend line, and if that goes, you could certainly add a target right here around 110.70 and possibly move down to about the 97-ish area. Okay, next one, Micro Semi, MSCC. Again, these are all top components of the IWM. That's what I'm looking at here. Negative divergence, bearish rising wedge, and it has this support level here. It's clinging to around 54.80. Once that goes, it looks pretty thin, and I'd expect to drop a target all the way down to about 46.50 or so. And possibly, if it gets in there and fills that gap, it's going down to 42.64-ish. So try to, there's a lot of meat on the bone on this one if that does play out, because you're looking at about a 15% drop to my first target. And then if it heads down to that second target, that's about a 22% drop. So, and that's always the case, guys. I can give me an index, an ETF. I can make a bullish or bearish case for that sector or index. But then I can also drill down within there and take a look at the charts of the most bearish or bullish stocks, and usually outperform the index that way. Because when you go long or short IWM, you're going long or short nearly 2,000 stocks, and the chances that they're all going to have bearish charts or drop down, or all have bullish charts and all move up at the same time, are virtually zero. You're always going to have the good and the bad. You have different sectors and industries within there, so that's the reason that these and that's why people like trading the indexes. You don't have the risk of a big gap down or gap up like you do trading in individual stocks. So it cuts both ways. Ozark, OZRK, this is another regional bank here. Clear negative divergence. This one again, crazy rally after the elections. As I mentioned, with hopes of the Trump administration dismantling Dodd-Frank. You can see it's a pretty clear uptrend line and rising wedge pattern, and I see this one coming back down to at least 44.93. Might work. Could has a little upside in this wedge, but I think this wedge is pretty ready to pop. We're about to that sweet spot around 70% or so towards the apex of the wedge, where it usually breaks down if it's going to break down. And if it fell from here, that's about an 8% to about an 8 or 9% drop on Ozark. There's a daily chart. You can see a reaction high here, some reactions there, and so it's also at resistance on the daily chart while extremely overbought, and PPO is rolling over. RSPP, there's strong negative divergence, very clear negative divergence building in that stock for months as it's gone on and pushed up to a higher high. There's an uptrend line that needs to give way. 60-minute chart, not a whole lot to see. It stands out to me. EXEL, here's a biotech stock. As I mentioned, those definitely caught a bid after the elections too, and a lot of those have since been faded. Some of these small caps are actually holding up better than the large cap biotechs, but here's a trend line I'm watching. You can see a divergent high. In other words, from this point right here, price has made a higher high, actually a double top high, while the MACD, RSI, trend indicator, everything else was diverging. So it's the same story, and this is why I'm doing this video, and we're only going to look at two more and then I'll wrap it up. SNX, Synex Corp, there's a divergent high. I didn't draw it out there, but you can see it's really a double top high. And the MACD, or the PPO in this case, and the RSI are making about equal highs, so there's negative divergence from this point to this point. And let's see if there's anything worth noting. Yep, here's a 60-minute chart. Just as divergent lows warn of impending trend changes on, in bull runs, as it did here. We had positive divergence all the way across the board, bullish falling wedge, breakout, near back test, and boom. Now we've come full circle. This one's come up to resistance, which is a previous reaction high. We have this ascending price channel. When after the initial post-election rip, the momentum started to wane a little bit. In other words, this was a near vertical run. Then we set up in this pretty tight ascending price channel, and then we have since broken down from there with negative divergences in place. You can see how well the trend indicators have worked on this stock. Clearly bullish from here. It tells you, short here, get or sell. The stock dropped, buy signal right here, stock rallied, flipped to bearish here, told you to get out or get short all the way to this point. And again, this is what I talk about, not using trend indicators as standalone buy and sell indicators. So you were following this falling wedge pattern, let's say. You see the bullish divergence, which gives you a heads up before it even occurs, and then you wait for a breakout of the wedge. And you had additional confirmation shortly after the wedge breakout because your trend indicator flipped to bullish and remained bullish all that time. And now you can see we have negative divergence and a trend indicator that's about to go bearish. So if you ask my opinion, this is a great short. If you want to short that one, I think it's probably heading down to that 110.25 level at least, maybe a little bit lower. I could see it going, all the way down here, and that's, a drop of, almost 8% or so. UBNT, negative divergence, divergent high on the 60-minute chart. As you can see, all the negative divergence, same story as the rest. There's a daily chart, clear negative divergence. PPO's curling down, making a bearish crossover to confirm that divergence. So here's your bearish rising wedge pattern. These were just other trend lines that I had on that stock. And this would be a swing sell signal, swing short sell signal is what I mean to say. By swing trade, I'm talking more than just a quick pullback trade that'll last a day or two. If and when this wedge breaks, as I expect it will, the minimum target on that one's 48.34. Remember, these are just the actual support levels. I haven't adjusted them for an optimal fill. Then 45.26, and things get really ugly, which again is certainly priced in the charts. The possibility of that, and you want to just trail your stops down, you might be able to ride this one all the way down to the 37.10 area. So you're talking, from where it is right now. If I can grab that level, there's a potential for a 33% drop, and even if it doesn't do that, I think at minimum this one's about to drop 13, almost 14%. So it's a lot of individual stocks out there. If you have the experience and you're able to diversify your portfolio enough that you're not burned if you happen to hold one of these into earnings or any news-driven event and you get caught on the wrong side of a gap. If not, just stick with the trading the broad market ETFs for now. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.